All right, everyone, and welcome. Happy Monday. This is Scott Thompson, Senior Manager and Schwab Coach. Grateful to be here with you today. Brett Crowther is in the chat and appreciate him taking your answer questions. And follow both of us on X.com at Scott Thompson CS or Brett Crowther CS. We won't be reaching out to you to solicit anything. So if you get some of those, realize that that's an imposter. It's not us. Big shout out to Eva and Paul and Texas Beach Bum and Lawrence and everybody else that's here. Appreciate you taking some time out of your Monday to be here. We got a lot of stuff to cover. Have you ever, one of the things that drove me absolutely crazy when I first started investing was getting stopped out of something and then having it like recover the next day or the next 2 days. So, volatile markets happen every once in a while, but it seems like every quarter we have volatile stocks, right? So today I wanted to go over some different ways to manage your stop orders. And we know that the stop orders aren't guaranteed to fill at that stop price. It just triggers that order. But what are some ways that we can manage some of that volatility? We had an instance with Intel this week that I wanted to go over, or sorry, last week that, gapped over our stop. And so I want to talk about some ways to handle that. One of those ways increases our risk. Another way makes it so we don't get stopped out. But, there's always pros and cons associated with it. But anyway, that's what I want to cover today. We'll go through that. We also want to take a look at some of our open positions and manage those stops on those because we have some new buy signals. So a lot of stuff that we're going to do today. And as promised, today is the 28th of July. So we will have a live only bonus segment for those of you that are attending live today. We'll be going over our ETF investment plan a little bit more in detail today. So stick around till the very end. And before we get going, let me go ahead and review our important information. Just remind everyone our presentation today is for educational purposes, not a recommendation of any particular investment strategy or method. We also are going to be looking at the paper money account. That paper money account has some significant differences compared to your live account, so be aware of that. There are risks involved in investing, including the loss of principal. And the other thing too that's important to remember is when we're talking about different strategies, that's not a recommendation, and none of the stocks we look at today are going to be recommendations for your own investment. So let me jump over here to our Thinkorswim platform and go through in this example on Intel. The very first thing, and I like to do this with everybody, when we're looking at our charts and we go back to review our stock. One of the things that I think is important is that you go back and analyze, whether or not your entry was valid based on whatever rule set you're trading. Now, our rules are pretty simple. We're looking for stocks that are generally uptrending. The green line on the chart here's a 50-period moving average. We have a little bit faster set on the MACD histogram. We're using 817.9 as our, lengths of time in that indicator. 1226.9 is the default. This one's just a little bit faster. There's been a lot of questions about that in the previous sessions, and I've posted answer to those questions in the comments on all the different sessions that have come up that we've been through. But the reason I use an 817.9 MACD is that's just the first one that I learned, so I like that one. Nothing wrong with the 1226, just a little bit slower, which means that we might have a little bit delayed action on the buy signal and a little bit delayed action on the exit signal, that red arrow. People have asked too, how do you get the green arrows on here? This is a setting on the indicator itself. Just make sure when you go into edit settings, you do show breakout signals, and that's where you get the arrows. So the first question that comes up when you're looking at something in the past, and we're going to review Intel because this one gapped over our stop, and I'll show you how you can kind of see that prior to the market opening, and then I'll show you what I did on that day. Okay, so very first thing is, this is the day that we bought this stock. The question is, was that a valid buy signal? Now, if you're a little bit more technically oriented, you probably look at that candle like I did and thought, wow, that looks like a hammer candle pattern. We'll talk about some of those in the future, but if you want a great review of hammer or candle patterns, so we have a Getting Started with Technical Analysis webcast series I think it's on Wednesday, or actually Technical Analysis is on Tuesdays. Getting Started with Thinkorswim is on Wednesdays. But on Tuesdays, if you want some more details on technical analysis, go watch one of those sessions on candles. But this day, the question is that a valid buy signal based on the rules that we have? The moving average was rising. The MACD was still green, although it was green for about 5 days. And the moving average turned green here on the 16th of June. So the answer to the question, is that a valid buy signal? The answer is yes, it was. And the initial stop, and again, if you want to go through the rules, we covered this in great detail on episode 3 of our plan. So you can go back to the watch list. I posted a link for that earlier today. But the rule is to put the stop 1% below the moving average. The idea here with the stop loss in general is to have the stop take us out of the trade if the trend changes. Okay, that's the purpose of the stop loss. So we set our stop initially 1% below the moving average. The moving average value, if you put your cursor on that day, is right there at the top of the screen. This number right here. So if my cursor's on that particular day, that moving average value was 2133. And so we would set our stop 1% below that, which was 2111. Okay. And then, the next few days, the stock kind of bounced around. It looked like it was starting to go back up here. We were hoping that it would make a new high in the trend, and, it just didn't. We got a big old down day here. This was the day before earnings. And then the next day, I saw, okay, and now where did I see it? Okay, where can you see the pre-market quote when you're looking at the chart, or you can do it on the trade page too, but here's where I was looking, okay? So on this day, okay, well, actually, this is the morning of the next day, because they announced earnings and they had their earnings right down here. They announced after the market closed. So on the 24th, we had that big red candle, and on the 25th, they were going to open up, and I looked right up here. Do you guys see this? Right up here at the top, there's a bid and ask price. And I saw that was quoting at about $20.63. Okay. And so when that's quoting at $20.63, our stop was at $21.11. So let me ask you a question here. I need everybody to participate. Stop doing whatever you're doing here, because this is important that you understand this, is that quote, and it's subject to change. It's going to change up and down all morning until the market sounds and the market opens. But if the stock opens at 2063 and our stop's at 2111, where about, let's just assume the market freezes right on the open, but where about are we going to get filled on our stop at 2111, or are we going to get filled closer to that 2060 opening price? So think about that a minute. We teach this and talk about this all the time with the stop. The stop does not guarantee 2111. That's where our stop price was, but that triggers an order. So if that stock opens at 2063, what's going to happen? Well, if we don't do anything with that order, it'll say, oh, hey, Mr. Broker, stop. Don't do anything until this thing goes below 2111. And if that happens, then go ahead and throw a market order out there and just get me in line with everybody else. And that order could fill at 2060, or if it's really dropping fast on the open, it could be 2040, $20. It could be 19. I mean, we just don't know. And that's why we talk about that, is that stop could get filled at a much lower price. So what are some things that we can do to maybe avoid getting stopped out like right on the open? Now, the tech stocks, back in the day, these were notorious for, maybe even making earnings or making the earnings announcement, and it would gap down because the guidance or the expectation was so high for these that it would still gap down even though they made earnings. Now, I think Intel missed earnings. Well, actually, it was they actually did a little better. You can see here it says the estimate was they were going to lose 13 cents a share, and they only lost 10 cents a share. So it was actually a beat on the earnings, but they still gapped down. Okay, and that's pretty common with tech stocks. Will do that. And one of the things that drove me crazy is it would gap down, it knocked me out of the trade, and then rocket back up by the end of the day. So here's the first technique. Okay, first thing that you can do, let me go over here to the monitor page and go to the account statement, and we have Intel. And so we bought 21 shares of Intel back on the 14th. We set that initial stop at 2111. And then that morning of the 25th, I noticed that the stock was going to gap over or open below my stop. So the very first thing that you can do is you can set up your order to where the trigger happens later in the day. Okay. So let me show you how to do that. Just I did some other things here which I want to talk about, but if you go onto your working order, you can go into cancel replace order. Let's go over here to the working one. So here's Intel. I can go cancel replace, and the very first thing I did before the market opened, I went over here, and when you put your cursor on this line, there's a little gear right here. And when you click on that gear, it brings up these order rules window, and you can say submit the order. And so I had that 725 day, and I put this is your local time now. I said, hey, don't activate my stop until the last 30 minutes of the trading day, which is 1:30 p.m. Mountain Time, which is 3:30 p.m. Eastern Time. And so this was the first thing that I did. I wanted to give this a chance to open below that stop and not stop me out. Okay. Now, after I did this, now what's the trade-off? This is important, and this is an important thing to remember. If we lower our stop, or in this case, change the stop activation time, what's the very first thing that could have happened to me? It could have opened at 2066, and it could have kept dropping all day. And I don't know, it could have gone all the way down to 1950. I could have lost way more than the shares by doing this particular order. So that's the first thing. You're creating a situation where you may increase your risk by changing that time activation of your order. Okay. But that was the first thing that I did. I was hoping the stock would open up there about 2060 and then, kind of wiggle around a little bit and then ultimately work its way back up above 2111 where that initial stop was. And then we wouldn't get stopped out, and we'd still allow that stock to, play out for us. Okay. So Dave's asking, take your stop off for the start of the day. That's essentially what I did, is I put a timestamp on there, right? And so that's one thing that you can do, but the drawback, of course, is you're increasing your risk. Okay. Now I'm going to go over here to that day and see what happened. Well, that was a pretty volatile day. The stock opened up there. It actually opened at 2068. It rallied up all the way to 2105, almost to that original stop, dropped all the way down to 2036 during the day, and then closed at about 2070, okay, on that day. And so at the end of the day, what would have happened? Well, if my timestamp at 30 minutes before the close activated that 2111 stop, and the stock is trading at 2070, 2050, that's about where it was trading when that trigger happened, then you would have been stopped out of all the shares. And in this case, we would have lost, if you got filled about 2050, you would have lost, what's that? 2111, 2060, about 60 cents more per share. And now the whole way this thing works in general, please get this. This is so important. The reason that we are so emphatic about starting your trades with acceptable risk is because it allows you some flexibility when you run into these scenarios. If I had bought 100 shares of this and was uncomfortable with that risk, and I tried to do this, it just doesn't work. So you have to be very comfortable with your risk at the very beginning of the trade, which is why I like to have you ask questions like, how much am I really willing to lose or risk on this particular trade? Because guess what? It could be a losing trade. All right. So anyway, first thing, I put a timestamp on the stop. There toward the end of the day, I could see that we weren't going to be above 2111. And so then I made another decision. So what's another way that we can manage this risk? Well, again, I'm thinking, well, that candle being what's called a spinning top, small body, long shadows on the top and bottom, that's an indecision type of candle. There's a big tug of war going on between the bulls and the bears. Nobody really won the day. I mean, the bears obviously drove it down, but what did we notice? Well, I had some support at about $20.10. I have some extra support down here about 1931. And I said to myself, well, one, to illustrate this point that I'm talking about today, and number two, to kind of teach you some ways to manage a volatile stock sometimes, is what I decided to do is I decided to change my order. Instead of stopping out of all 21 shares of the stock, we decided to put the stop on 11. So here you can see I canceled my 21 share order and I had 11 shares with a stop at 21.11 that was activated there at the end of the day, 3:30 hours or 13:30 hours local time. And that order actually filled. Okay. We got filled and I got stopped out of 11 shares. And then I had to say, well, I have 10 shares left. What do I want to do with these? Again, trying to give myself an opportunity to see if the stock will recover or not. And so I set a new stop on my 10 shares. And what I ended up doing is I put the stop here just below this lower level of support. You could do that. You could put it down at $20. You could put it here at 19, 21 like we did. Just the point is you can manage your stop. One of the things that kind of blew me away really when I first started investing was that, I had the stop loss on and my hands weren't tied. I could still do some things with it. I saw a question or a comment there about, buying an option, and we don't talk about options in this webcast. So, go to our Getting Started with Options or going to a different webcast to talk about some of those protective strategies. But the point is here is that we can, go there, and I just need to mention that options are not suitable for all investors. All right. So anyway, timestamp on the stop was the first thing I did. I recognized, hey, we're not gonna be back above there, so I decided to sell half our position, and I moved the stop down below support with the idea, hoping that the stock would recover. Okay, now here we are today, and what do you notice? The stock's bounced a little bit. It actually traded above 21.11, so we'll see if this recovers. But I just wanted to go through that process with you. Let me check to see if there's, questions you have. I'm kind of looking through here. Sri's asking about a MACD. I don't want to go into those details. Brett can probably cover that a little bit. This was a sell stop order. I see a comment about that. And it looks like you guys are participating with me, so that's great. Now, if you do have some questions that I didn't get to, I'll answer those in the YouTube comments there. But what I want to do now is I wanted to go through some of our open positions and just see what adjustments need to be made. We'll take about 10 more minutes to go through some of those. It's been kind of fun. We've had a really interesting week. Very first thing I want to talk about is we are using the S&P 100 is our public watch list. Okay. And so that's just a watch list available on your gadget over here. If you click that, you can go to public watch list. And, we're using the S&P 100, but you could do our system or that two green arrow system on any of the, different watch lists that you want, or you could customize and create your own. Okay. But, the daily routine is to go through that watch list essentially every day and look for new buy signals. Well, what does that look like? Well, here's Amazon. Okay. Amazon's trending up, and Amazon, honestly, because it's one of the top 10 webcat or holdings of the ETFs that track the S&P 500 and the NASDAQ, I'm trying to avoid trading those top 10 in our two green arrow system. But I did want to talk about this. I wanted to show you here. The MACD actually gave a green arrow buy signal based on those rules that we're talking about. Again, no recommendation there. But that gave a buy signal on the 21st, and then it gave another buy signal here on the 24th, right there. Okay. And so if someone was to buy the stock on the 24th, and it's still valid today because the green arrows are green until they turn red, again, the rule is to buy the shares near the close just to confirm that green arrow. And we set the stop initially 1% below the moving average. Okay. But Amazon had a buy signal during the week. If you were doing your daily routine, you should have seen that. And, as homework, I would like to see you practice in paper money, whatever strategy it is you want to follow. Okay. The next stock that I thought was really interesting is this SPG. And this one I want to talk about because two things happen. Number one is we got a two red arrow signal right here. Does everybody see that? Right there, the MACD had turned red on the 11th. And then here on the 15th, we got another red arrow. So what are we supposed to do when we get two red arrows? Well, this is a stop adjustment signal. Again, if you want the details of the plan, just go watch episode 3. We went all over the different rules, when to buy, how much to buy, when to sell, how much to sell, and the daily routine. But the exit signal, and it's really not even an exit signal, it's a stop adjustment signal, is when we get two red arrows. And the rule is to put the stop, 3% below the low of that red arrow day. Now, why do we do that? We do that because historically, technicians believe that a stop or a support level is not really broken unless it breaks by 3%. That's kind of where the rule comes from. And so in this particular case, the low price that day was 159.33. Again, you can just see that up here. We have the open, high, low, and close. So the low price was 159.33. And I think if I did my math right there, the stop would be at 154.55. Okay. I'm going to pull up my calculator just real quick. Let's verify that. So it was 159. So 159.33. Up the calculator. So 159.33 times 0.97, and that's 154.55. Now, here's the important part. When we're doing a calculation, I want my stop to be below support. And so, in this particular case, SPG's been trading a little bit sideways and has a pretty good support line or a floor right here about 155.96. So if my calculation says to put the stop at like 157 or 157.50, then I may not want to put it that close because, again, the purpose of the stop is to get me out when the trend changes. And this has been trading in a little bit of a channel. Hasn't been the best performance stock for us since we got in here on the 24th. But, if my rule says to put the stop at like 157, I always want to double check and say, well, where's my support level? Does that make sense? And in this case, 154.55 made sense because it was below that level of support. But now we have an interesting situation. This is why I brought this one up, is I wanted to talk about this. What happened right here? You guys see this? The MACD was red, 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 red. You can see the way the color coding works here is when that turns like darker red or that maroon color, the MACD histogram is starting to show a change in momentum. And usually that coincides with the price moving up. And a couple days later, we actually got this green arrow, which now we have a green arrow on the stock because that happened right there. We have a green arrow on the MACD, which happened a couple days later. So technically, we have to ask ourselves, is that a new buy signal? Well, I would argue that because the stock is trading sideways at this point, that most technical traders at this point would say, nah, I don't want to buy this right here. I'm going to wait for it to break out above kind of this 167.81 level. That's generally how we interpret these rules with buy signals and trends. If the trend is up real strong like Amazon was, we'd probably just go ahead and buy it. But this one's trading sideways. So one thing that people would do is wait for that breakout. Now, last little point on this one, then I want to look at a couple others here, is, this particular day, we did get that arrow and the moving average values at 161.55. So if we just took the rules at face value, is the moving average rising? Well, I mean, it's kind of flat really through there. You can kind of see that. I mean, technically it was at 161.50 the day before. The next day it's at 161.55. So, I mean, technically it's rising. So we could interpret that and say, well, it is two green arrows, the moving average rising. I'm going to go ahead and buy that. Okay. And maybe we'd get in there about 165.57 there at the end of the day based on the rules, which is not a recommendation. And then the rule says to put the stop 1% below the moving average, which was 161.55 that day. Do you guys see that? So again, just look right up there, okay? 161.55 is where that moving average value is. And if we come down and take a look at that calculator and we, say, okay, what was it, 161.55 times 0.99, that's the rule. It says to put the stop at 159.93, okay? And then we would ask ourselves, well, does that stop make sense? 159, we're below the moving average. This last low was there about let's close that. So this last low was at 159.33. So again, if you're going to adjust your stops, again, the whole point of having a stop is to get you out when the trend changes. If my stop's above the last low in the trend, then it doesn't really make sense to put the stop like at 159, say 63. I might want to put it there below that. So I just wanted to take some time to kind of go through some of these little nuances with the stop orders, go through that example on Intel where we have some choices. We're not just handcuffed there with what we can do, and realize that we're increasing our risk by making an adjustment on that stop like we did on Intel. Now, take about 5 minutes here before we wrap up to do our live only segment on the ETFs, which I'm really excited about. But I wanted to share a couple other stocks with you. Okay, TXN. This one gave a gap down on earnings. It didn't hit that initial stop, but it did give 2 red arrows. And so what are we supposed to do? Well, 2 red arrows, we adjust our stop. The low price that day was 185.29. And again, if I did my math right, that puts our stop on TXN at 179.73. And I adjusted this one already. Now, how do you do that? This is really cool. So like if you go up to your charts, you can have this show orders on your chart. And that's how I've got this line right here. But if I want to adjust that, check this out. I can just move this up and down and it moves that stop by left clicking and holding that. And then, it'll bring up this order confirmation window and I can say edit, I can say delete, and hopefully that just puts it back where it was. But it's really cool. You can move that up and down and put that stop there. All right. So I do have one or two that I want to look at that gave new buy signals. And so I want to adjust the stop up on those. BAC was one of those. So BAC here, you can see we bought this on the little breakout. It trended up, made a new high at 49, came back and tested that area. The MACD just turned green over here on the, what day is that, 23rd. And so the rule is to put the stop 1% below the moving average. If I didn't own the stock already in our system here for our paper money examples, we could place this order here today. Actually on the 23rd last week, and the stop would have gone 1% below 45.65, and 45.65 gives us a stop at 45.19. Okay, so I'm just for time here. But I do want to adjust the stop. My stop right now is at 42, and we're going to move that up to 45.19. So how do I do that? Left click on this, and then just drag it up. And usually I don't worry about trying to get it right there because, it's just easier to let it go and then edit it here. And 45.19 is where our stop goes. And it's good till cancel. We hit confirm and send that order. Again, remember, no guarantee we're going to get stopped out at 45.19. That just triggers the order and it could get filled significantly lower. We hit send order. And, again, right here, we ask ourselves, does that stop make sense? If my last low in resistance area, support area is at 45.14 and my stop's at 45.19, maybe I want to lower that a little bit, just have it below that low, which is at 45.01. So maybe put it 44.91. So I'm just going to adjust that again. And again, wanted to show you how to do this. So it's pretty easy, pretty fast. And you can make these changes on your chart, which is really cool. So we'll send that off. And now our stop's a little bit below the last low. If it hits the stop, it'll knock us out of the trade and we'll lose money. But not too much because we got in about that same area. Okay. One last one. How much we do? 2 minutes. Okay, so this is BAC that gave a buy signal. EMR is another one that gave a new buy signal. This one's really fun because look, we bought this one. This was one of our very, very first purchases when we introduced this plan several weeks ago. Again, if you want to go review the plan, go back and take a look at the episode 3. But we bought this on a 2 green arrow buy signal. We set our initial stop down here. We got some green arrows over here, right? So we can adjust our stop. We got a red arrow here on the 14th. We don't do anything. This is what's really fun about having a system of a set of rules is it only takes a few seconds to determine our daily routine. Do I need to do anything that day? Let's go back in time. I have a green arrow here, a red arrow here. Do I have anything to do? Nope, I'm done. Next day. Okay, we move the chart forward a day. Oh, green arrow on the stock price, red arrow on the MACD. Do I have anything to do? Nope, I'm done with my analysis that day. Next day. And we just keep doing that, right? Next day, next day, next day, next day. And right here, we have a signal. It's like, oh, if I didn't own the stock, I could buy it right here. If I bought it that day, where would I set my stop? Well, the stop, based on the rules for our system, would be 1% below the moving average value on that day, which is the 23rd of July, we would set the stop 1% below 129.31. And if I did my math right, that would say our stop's at 128.01. We take the moving average value times 0.99, and that will give you where you should set that stop at 128.01. So how do I adjust my stop? Really cool. I click on this with my left mouse button, and check this out. We're moving this stop up $13 a share. That's awesome, right? So we left click here, we drag it on up, and I can watch that number. I'm trying to get to 128.01. So I do like to, just for fun, well, 128.07 pretty close. Still got to edit it. Come in here, 128.01. You know, hit confirm and send, review the order. Remember, a stop just triggers that market order, could get filled much lower than that. You know, anytime there's a red section down here, you probably want to review that before the send an order. This is confirm and send, not send and send. Okay, so we send the order off, and now I have a new stop, and this is where we are today on EMR. And EMR is up there at 149. We have a nice little profit on this, and we moved our stop up. And in this case, if I remember, let's take a look. You know, let's type in EMR over here on our account statement. EMR, we actually bought it at 128.44. So our stop is like 40 cents away, 43 cents away from where we bought it. And with these longer term investing type of rule sets, you know, it takes usually a month, sometimes 2 or 3 months before your stop gets above your purchase price. But that's kind of a fun place for the stop order to be, is above our entry price. Now, it doesn't guarantee any profit, of course, because the stop activates and triggers that market order, but it's fun to have the stop above your purchase price. You know, from a psychology standpoint, most investors really like that. Okay, so this is what I wanted to cover in our live section here. There are a few other stocks in the watch list, that S&P 100, that have had buy signals during the week. You know, looking at that, I see a comment there from Laura about selling some stocks to lock in profit. This is so challenging. I do want to address that question really quick here before we go into wrapping up our session. But one of the challenges when you're dealing with a rule set is we don't have a sell for profit here. Now, could you include the sell for profit in your rule set? Absolutely. But we don't. We're trying to ride this trend. That's the whole objective of this rule set, is to ride the trend as long as possible. All right. So thanks for that. I know Brett's in here answering some questions. Let me just kind of wrap up this segment, and then we'll take some time in our live only bonus segment for going here. So again, for those of you that were here live during our recorded session, thank you for being here. For those of you watching the recording, you know, if you have an opportunity to join us live, you can catch some of these bonus live only sessions that I do. Otherwise, you know, go back and watch the recording, and you can kind of see the different rule sets that we cover. All right. So there is the end of our